Good morning, everyone, and good morning, Austin. Today is a very special day. We have Derek Macpherson on, who's the new president and CEO over at G79. G79, just a quick shakeup, and I'll let, of course, Derek explain it more, but looking for gold, Walker Lane, Walker Trend in Nevada. This is, a lot of people have heard of the Carlin Trend in Nevada, but make no mistake, if you know mining, you know Nevada. What a great infrastructure. It's a place to be. It's heavily known for mining. We'll get into that. But we want to sit down with Derek, lay it out for us, tell us what's happening. There's a lot going on. Tell us all about G79. How's it going?
Things are going great, Andrew, and thanks for having me. Thanks for having me on today. I would say, with Gold 79, there's been a lot of developments lately. Probably, as you noted, I am the new president and CEO here. I just joined effective May 1st on the back of financing that I helped support, was actually the lead order on. But then, we've been busy getting to work as well. And, our most recent press release, which was out yesterday, we talked about some of the mapping and sampling work that we've done that led us to double our land position at our Gold Chain project. And interestingly, and we are in the Walker Lane Trend, the Gold Chain project is in the Walker Lane Trend, but we're actually just in the Arizona end of it. We're just on the other side of the border there. But yeah. You know what? From a mining jurisdiction point of view, both Nevada and Arizona are on par. So, and it's and in particular in the part of the Oatman district where we are, there's actually been 2 mines built in the last 3 years, which isn't something that you can say for everywhere else in the world. So,
now touch on quickly because you mentioned this doubling of the land position, because that's significant because someone else just lately has increased their land position dramatically in the region, and it's important because this is a hot area. It's very well known. But tell us why that was significant, the land position that you just announced.
Sure, and you've got the figure up there, and this is perfect. So when we first went to Arizona, we just had the reddish color, the gold chain, blacktite, and roadside targets earlier this year. So we started a mapping and sampling program in the fall, and earlier in this year we added the purplish color, and then just recently we added the green. And basically what we continue to see is that what started as sort of three little targets in gold chain, black dike, and roadside has turned into a large epithermal system. In fact, we have about 12 kilometers of strike, and this is very similar to the balance of the Oatman district as far as the mineralization goes. In fact, we're calling it the North Oatman Trend. But to put together 12 kilometers of strike along here, and you can see from the sampling results, we have some pretty splashy numbers. At the Banner mine, which is that little the past producing Banner mine, we had 25 gram sample there, 25 and a 9 gram sample there. Down here at Sugarloaf, which is a little bit further away, we had an 18 gram sample, and then on the Sunset vein, which is that north south extension you see from Banner, we had 11 and a half, and then very good sampling results led us to double. And we were fortunate to move when we did. Obviously, there's been a bit of a staking rush in the Oatman district. And what we saw yesterday, coincidentally, we announced them at the same time. Northern Vertex also announced their significant land expansion. The Moss mine itself is about 12 kilometers from our land position, but they've staked ground, looks like all the way up to very close to where we are. We think they're within our claim boundaries are now within a couple hundred meters of each other.
And just before because we'll review everything and get into a bit more detail, the reason why this is important and you're in close proximity to producing mines, Newmont, Barrick, they're up the road a bit, is that you have economic numbers, and this is significant because you don't need to hit the moon. It doesn't have to be a massive discovery in order for this to be economic, feasible, and even probable. If you can bring some value, add it up, get it in there, this becomes very interesting for another player to look at, for sure.
Yeah, absolutely. Obviously, there's a power line that runs through the claims. There's, we're just off the highway. It's a 10-minute drive to Bullhead City, Arizona. And it's a county that's, very, very pro mining. And so those things are all positive. But I think also, if you look at Northern Vertex as sort of the template of, if you consider us an earlier stage of that, Northern Vertex built a mine with 500,000 ounce resource at about 0.5 to 0.6 grams gold equivalent. That's not you don't have to do a lot of drilling to get to that that level of economics. And I think we've got that potential easily. And and I think I think we've got that potential to get to that initial starter mine, and then also, much like Northern Vertex, we have these big trend extensions that can give you that longevity. And roughly speaking, we're still counting the hectares, but I think we're the second largest landholder now in the Oatman district. And so we have a big enough position that we're not reliant sort of on Northern Vertex to be the big brother to come take us out at some point to be a producer. It's a big enough land position and has a big enough scale that someone else could, if they wanted to come into the district, they could use us as the vehicle to do it.
Yeah, it leaves you with that optionality, and your cost of drilling is a heck of a lot cheaper than, say, Carlin Trend or anything like that, where a lot of times, I mean, they're having to go in blind, they're going really deep. This is an opportunity to build up, hopefully, assets that can be considered by any of those big players in your neighborhood there.
Yeah, I think the one thing I really do like about Gold 79's projects, and not just the Gold Chain project we've been talking about in Arizona, but the other two, Jefferson Canyon and Tip Top, that are in Nevada, they're all epithermal systems. And epithermal, like, just from an exploration cost perspective, Carlin systems are very difficult to explore. They're very expensive. I mean, you're committed to spending about $10 million US in exploration to figure out whether you have something or not. It's not junior mining company budgets. We have all the epithermal systems. They're a little bit easier to explore. And as I noted, for not a big ticket, you can get to that economic scale relatively quickly. So that's kind of where that's what our focus is. And that's not that we've avoided Carlin type deposits, but it's nice to not have that kind of risk, I guess, exploration risk with it as well.
It's one of the fascinating things, but also troubling, is it's such an interesting, Nevada in particular, interesting geological setting that it's fascinating, but it's also can be a bit difficult. But you'd much rather have one that isn't quite as fascinating and difficult to work with and to prove up than one that's extremely challenging. Simple is always better. So let's take a quick step back, because you're the new president CEO. Let's just talk about the management, because I always look at things pretty simply. I mean, we look at the project, the region, what are the assets that you're going for, infrastructure, but also who's the management, the team, are they going to be able to get this project moving and whatnot. So you've been kind of given the nod, but you certainly aren't new to this in any way, shape, or form, having been an analyst in the mining sector. So take it away, kind of walk us through your key drivers right now.
Sure. Yeah. So I'll give you a little my background first. I'm a former mining analyst and investment banker. I had probably 10 years capital markets, and before that, when I had a real job, I was a metallurgist. So I do have a technical background as well. And I joined the company because I saw the opportunity. When I saw an opportunity not only to get involved in a company that's undervalued and certainly could do well, but also one where I could get my money to work. I own about 3% of the company, and the management team in general owns just over 15% of the company. And so we are well aligned with shareholders. And I joined the company. My first contact with the company was Gary Thompson, the executive chairman. Some of some of our viewers may know him from being the chairman and CEO of Brixton. I've done a lot of work with Brixton and in my past life. And so, we've been talking about Gold 79 for a while, and Gold 79 was getting to a point where it needed dedicated management, and Gary said, well, asked me if I'd be interested. And then, Gold 79 actually was it was an amalgamation of two companies. It was the amalgamation of a private company called Territory that Gary put together, and a public company called Aura Silver. And so the balance of the management team, Rob Johansson, who was the CEO of Aura Silver at the time of the merger, and our CFO, John McNeese, they came from the Aura Silver side. So they have the history on the background and are very aligned. And I've really enjoyed working with all of them. Rob's been our boots on the ground guy. And the reason that we staked all the ground that we did at Gold Chain and are where we are on that project is because of the work that he's sort of done himself on the ground. And then we have a great board to back it up. And I was comfortable coming in because I knew some of the guys, James Franklin, who's a Mining Hall of Fame geologist, Bill Boberg, who's one of the founders of UR Energy and was the former CEO, and Paul Corello, who's got a background in finance, previously working for RCF. So a good, diverse group of individuals and all guys that I like to work with. It's been a lot of fun so far.
Good stuff. Yeah, one of the things I want to touch on, because we have to kind of talk about it too, is the share structure. So it's not not the end of the world, but you've got 180 million shares out in total if it's fully diluted and whatnot.
Yeah, so I mean, there's 120, just over 121 million shares out right now, and then there's about 49.5 million warrants out, and obviously that's the part that could be concerning and potential a bit of an overhang. No project is perfect, as I like to I like to say, but there are things you can fix and things that you can't. You can fix management. If I'm not the right guy, you can fix capital structure. You can't fix the rocks, and we got good rocks, which is something that's very encouraging. And so the capital structure is something we'll work on. The warrants are, there's 7 and 10 cent warrants that are due next year. And that's about 17 million of the warrants. And then there's the ones that we just issued in the most recent financing, about 27 million of them that are at 12 cents, which are in 2023. And the easiest way to fix that is to fix those warrants is to do it via exploration success and moving the share price up. Yeah. But the other way is that there are other creative ways to do it, and we're going to work on that. It's something that is on the on the to-do list of things to resolve.
Yeah, and like you said, nothing's ever perfect, and certainly structure is something that's far more easy to resolve, and will resolve itself too with great programs and with the money being allocated and exploration results being strong. And once again, I like, not to throw up a softball, but you don't have to hit the moon. Like, I mean, if you do, that's wonderful. But I mean, not only, like you'd mentioned, that you've got economic feasibility in theory, it looks good. And we'll maybe ask you what pricing that was at as well, like what the gold price and silver price. It's mostly gold, but that you were kind of basing that off of. I would say most people would say that moving forward, the gold price looks pretty strong. I don't think there's a lot of people that would say that that's going to drop severely. So we're hitting into a commodity super cycle more than anything else. And once again, if you have strong results, I mean, it's going to resolve. It'll resolve itself, and you have an access to capital that's coming in as soon as the stock price moves up.
Yeah, I think that's that's kind of that's the first choice. Have success, have it move up. If you look at what makes economic and the way we're able to talk about economic grades, the way I used to look at it as an analyst, and the way I sort of I would suggest that your viewers look at it is that. Always look at if I'm saying that 0.5 gram a ton is economic, is there something in production right now that's making money that looks like that, right? That's always the easiest test. And so, we're using our closest producing neighbor, which is Northern Vertex. The Moss mine went into production at that sort of 0.5 to 0.6 gram a ton level in a $1,200 gold environment. So, where we are now at, just under 1,800 and fighting to get back up there. It's this should definitely be something that works. And I think that's always a point. What's it look like? What's around it that makes sense? Was someone able to build a mine with the thought process that me as the junior CEO is saying, oh, that works? Yes.
Yeah. I know. Sorry, go ahead.
Yeah, no, I was just about to jump in to say, first of all, what for someone who doesn't really understand the area, what makes like Jefferson Canyon and Tip Top and Gold Chain exciting areas to be drilling in for you as an analyst looking at it as well?
Yeah, well, I think the ultimate goal here, the ultimate goal of any project is actually to get for it to become a mine. Right. This isn't it's all about building a story and building a resource and then building economics and then getting to a mine. And so, when I look at, specifically look at Gold Chain, there's a mine 12 kilometers away. We have the same rocks. We have the ability to replicate that kind of success. Jefferson Canyon is actually very similar in the sense that we're 7 kilometers away from Round Mountain, which is one of Kinross's mines that produces, I think it's north of 300,000 ounces a year. Actually, might be more than that. And so, if we have success, Jefferson's a little bit different. If we have success, we have a natural potential acquirer there. And Tip Top's the same way. There are operating assets around it. And so I think that's part of when you look at a location. The other thing is the other thing is land tenure, particular what type of land you have. So at Gold Chain, we have a combination of BLM patents and BLM land and patents. And patents are basically you own the land, and so you can, in the U.S. that means you can pretty much do whatever you want on that ground. There's a lot of flexibility as far as what you can do as long as you don't harm the outside environment. And so that's something that provides a little more flexibility. So that's part of the reason why gold chain's a focus there, because we have that option on some patents in there. Additionally, we've got Jefferson Canyon and Tip Top are U.S. Forest Service grounds, so the permitting environment's a little bit different, a little more stringent, but it's not nothing that's not overcomable. And there certainly have been mines built in those areas as well.
Yeah, having all that infrastructure around is a big bonus. That's for sure.
Yeah.
And of course, you having a bit of a metallurgical background, that's also a key component when you're talking about. Let's assume the positive is that you've got some good results. Once again, what's the grades coming out looking like? What kind of recovery rates are you getting? What's the bar, do you think, that you have to set in comparison to some of the, like the 500,000 bulk tonnage one that?
I mean, it's difficult to say. There's, as a metallurgist, it's always sort of top of mind for me. Are we really in gold oxide? Or, what's the recovery rates and things like that? But it's also, there's a time and place for that type of work as well. In the development cycle, and we're just not there yet. Like I think what we're going to see, if I had to sort of lay out the strategy for gold chain in particular, this first drill program that we're hoping to start sort of later this summer. We're hoping to sort of, I don't like using the word scout drilling, but we're sort of testing areas to see where it is. We don't know where that, we have a 12-kilometer trend. We don't know where that critical mass area is going to be the right spot to drill off a deposit. And so, this is sort of that scout drilling phase. And like I said, I don't like scout drilling. It's a testing phase to try and learn where that critical mass is going to be. I suspect it's going to be around the patents. But that is, and then once we do some of that work, and then, probably in the subsequent drill program, we'll start to get the samples that we need for initial met testing and learn exactly what we have. I think but I think, extrapolating this a little bit, I think that a lot of juniors make the mistake of, there's a balance of, you don't need to do it too soon, but because you also need to know that you have something that you want to potentially build and spend that money on.
Yes.
But you also don't want to do it too late when you're at the end of the resource phase and you're like, and what's past, if you look at what happened to Relief Canyon for America's Gold and Silver Corp, that is, that's a case where, they built the mine and they hadn't finished the metallurgy yet. So that's somewhere in between those two where we are and where they are is probably, you need to do a little more.
It's the sweet spot. Good. So now, and you've got earn-in for all three of these properties up to 100,000. Up to 100%. Those they're already structured, already done, and you've got a couple other projects as well. So you've got other things that that come into the mix, but they're not fully owned yet. But there are other projects too that are sitting in the wings that you're going to be poking around doing some work on too. We won't be doing work. Fortunately, we have partners to do it on the others. So there's we have the two minority interests. We have in Mexico, we are a 20% holder of the Tavichi project, which is right now is being explored by Fortuna Silver. Yes. Okay.
Our upside there is a little bit capped. It is capped. Our 20% interest we bought for $1 million. So the fact that they're moving it ahead means that $1 million is becoming a little bit more real, but it is just $1 million that we can get out of it. I expect that Fortuna's working on a 3-year earn-in with the group that we vended the project to, Minorum, and so we would expect that in the next couple of years we're going to get that $1 million check. As Fortuna advances it, it's close to one of their operating mines. The other project, which is a little more interesting, is our Greyhound project in Nunavut. Our partner there, we own 37% right now. Our partner there is Agnico Eagle. Agnico Eagle is funding the program right now, and so we're being diluted slightly. But Agnico Eagle's taking the high risk exploration drilling there, and that's right next to their Meadowbank mine. And so if they find something there, that program will increase, and we'll probably I would suspect that we would try and look for a way to fund that program.
And like I said, and
going forward, if they start to make a discovery and ramp it up.
Yeah. And I mean, you're drilling right now. So, I mean, that's kind of the urgency or reason to have someone look right now is I think you're sitting at 8 cents right now, but
Yeah.
You're drilling right now. This is underway, this endeavor. And that is what people should be highlighting on, is that you're in the right area. You've got, comparables, which is always positive, that are very close by in a very heavily producing area, not just, rich environment and producing area with lots of big name producers. And this allows you that economic rate to be, it's a lot lower than it needs to be. People love the big blue sky out in the middle of nowhere, northern BC, when you need massive grades and it's a huge discovery, and those capture headlines, and those are sexy. I get it. I like them. They're exciting. But if you can get something that can really take a hold of the situation we're in right now, where we need to be producing, and if someone can get something to production fairly quickly, I mean, it's mining, but still, where you can make the case to get something going, that's also very attractive.
Yeah, I think that's. I mean, I will make one minor correction. We are not drilling right now. We will be drilling later this summer.
Okay. Sorry. Yeah.
That is. But yeah, no, that's exactly it. When you're in an area with infrastructure, the difference between a remote project in northern BC and where we are is that the hurdle rate is lower. It is not gonna. We don't have to build a substantial amount of roads. Power basically runs through the site. We're just off Highway 68. There's a workforce there that we could tap into. We don't have to do fly in, fly out. I mean, so I think that there's that lowering of the hurdle rate makes it exploration success, and exploration success is obviously ultimately defined by, do you find something that can become a mine, and that makes the hurdle rate on exploration success lower. And I agree, and that's really the opportunity, and I think that's something that's really important for both our Gold Chain project and for the Jefferson Canyon one, because we have these producing mines right next door. We know what the template looks like for success, and so I think that and it also makes it easier for when you talk about potentially the likely an outcome where we get taken out. It makes it easier for those groups to come in, because they know that, hey, 3 years ago Northern Vertex built a mine in this same part of the world, or Round Mountain is operating and has for the last 10 years right next door. So it makes it a little bit easier to deliver on those opportunities.
I know, Austin, you were asking me some questions too about like how to engage younger people and whatnot into the space. I mean, because you started getting interested into it.
Yeah, it's something I always like to ask any president or CEO of a mining company when you guys come on, is what's the best way to galvanize or kind of charge up the younger generation to get excited about mining, to be looking at projects like Gold 79?
Yeah, I think, particularly with gold plays, I think that the opportunity is for a lot of I guess younger investors. I guess technically I'm a millennial, but the younger than me. For a lot of younger investors who haven't really seen mining as an investment opportunity. They are used to sort of the tech stocks or even now the meme stocks. But I think the thing to think about here is that, and I like it back to what happened at sort of the turn of this century, in early 2000, right? When at the end of the tech bubble, the first tech bubble, I guess, in the .com bubble, the stocks that really took off and really played were hard assets, right? And that was the opportunity, and gold companies are effectively an investment against that hard asset opportunity. And so that's the thing to be excited about, is that, or the opportunity is that, these ridiculous valuations that you're seeing in general stocks is going to come off, and the opportunity in the pair trade against that, and the I guess the thing that has lower correlation is gold and gold stocks. And the best leverage is actually the further down market cap you go. Your best leverage on gold is not Barrick. Your best leverage on gold is something like Gold 79, because that opportunity. Plus, on top of, you just don't need gold to go up with something like Gold 79. With the drills turning, one drill hole could change the world. And if you look at a stock like a Great Bear, or the early days of something like Orion Resources, or any other recent discoveries, where you get these parabolic charts that they don't exist elsewhere in and they don't exist elsewhere in capital markets, and so it's real. That's what part of the opportunity is. It's a bit of a drug once you get a couple of those, and you're like, oh, it's easy. I should buy more of them.
Well, you make a great point. I always like to highlight this too, is that, for a FANG stock to lose a couple $1 billion in a day, it's not even news anymore. It's like, oh, the stock it's a couple billion. You try to shove a couple $1 billion into the junior mining sector, you can't place. You have to place that money in other things. So when people start to reshift, and it doesn't even have to be a couple big funds. If they start to reshift, they have to look at commodities and hard assets. The Barricks, the Newmonts, those cap out before any analyst goes, I can't buy that. I'm not looking at that. And people start looking at everything else and going, I need to buy this. I need to buy that. And it's amazing how fast when these cycles go, regardless of results, whatnot, sometimes everything gets lifted in a rapid pace. And we see when the mining sector goes, that can happen often.
That's the best analogy I ever heard was when the mining cycle turns, or the gold cycle turns, it's like trying to pour a bottle of scotch into a shot glass. There isn't enough capacity to take the capital, and ultimately what happens is that there are trickle down economics of gold mining, but you get this initial, Newmont and Barrick, they get these inflated market caps, where analysts start saying, well, where's your growth to justify the multiple you're at now? Yes. And then they start moving down cap, and that same analyst who said, where was your growth, said, well, why would I buy you when I could buy the company that you're going to buy?
Yes.
So you're going to have, it becomes a bit of a trend down cap, if you will. And those are the stocks that end up doing the best. When I was an analyst, I had a very nice chart that showed exactly what happens. Early in the cycle, everything sort of moves together. And then later in the cycle, you get this big rollover where all of a sudden the small cap miners are the ones that get that excess scotch that's spilling out on the table are the ones who collect it. And that, and getting positioned early is the opportunity. But like I said, the difference between buying Gold 79 and Barrick, and obviously there's very different risk profiles, but the difference is that one drill hole isn't going to change Barrick's market cap, whereas one drill hole will change Gold 79's.
Perfect. Well, we really appreciate you coming on here and walking us through that, because like I said, we love areas that are well known, very rich in resources. You've made a compelling story, because I always like the unique twist. I mean, we talk a lot about the blue sky huge type ones, and those are fun, those are exciting. But what makes this unique, when you look at the numbers, you'd see, there's some good gray up samples and there's some good historical numbers, but nothing blows your mind until you understand, wait a second, you don't have to have mind-blowing results, which setting that bar lower, and we hope that you do. We hope that you do. You easily could hit some mind-blowing numbers. Like, we're not saying it's not going to happen. It easily could happen. You're in the right area. But when you don't even have to, there's a lot that's being de-risked already for a price. I mean, 8 cents. Once again, if you believe that the commodity super cycle is happening and that people are going to start looking, and they are looking, then why not? Why is a compelling case to be made?
Absolutely. Yeah, I think that's that sums it up in a nutshell. It's that we don't have to hit spectacular results to create value for shareholders, but that potential still exists as well.
Wonderful. Well, thanks so much, Derek. It was a pleasure talking to you. And good luck out there. We'll be watching to see any and all the news that comes out.
All right. Thank you very much, guys, and thanks for having me today.
Take care.
Take care, Derek.
Bye.